Assalamualaikum to our respected lecturer, Mr. Ahmad Fauzi bin Abdul Hamid. Today, we are pleased to present our analysis on threat simulation under the topic Introduction to Technical Analysis 2025 for the course FIN562. Our team consists of Nurul, Aliah, Izzati, Binti, Juhari, Andi Nurfatini, myself, Putri Nur Hasanah, Binti Abdul, Kadir, Pirhamna, Binti Haiber, and Nur Ain Sahira, Binti Lipu.
My name is Andi Nurfatini, and let me begin the presentation with an overview of our portfolio. This portfolio is designed with a strong focus on sector diversification to effectively manage risk while capturing growth opportunity across various industries in the Malaysian stock market. By selecting stocks from a wide range of sectors and create a more balanced portfolio. This approach also helps to enhance return stability, ensuring that the performance of one sector does not overly influence the entire portfolio. Our portfolio consists of carefully selected stocks across 5 key sectors in the Malaysian market. For the first sector, which is technology, we choose Frontcan Corporation Berhad. Next sector is consumer products and services. We choose Mr. DIY Group Berhad. For plantation sector, we choose Genting Plantation Berhad. For healthcare sector, we choose Top Glove Corporation Berhad. And last sector is oil and gas, Petronas Gas Berhad.
My name is Putri Nur Hasanah, and I chose to analyze Frontcan Corporation Berhad. Frontcan Corporation Berhad is listed on Bursa Malaysia. The company helps the semiconductor, oil and gas, and power industries by providing precision cleaning and surface treatment services. They clean, repair, and refurbish important equipment to keep things running smoothly. Frontcan operates in Malaysia, Singapore, Taiwan, and the Philippines, and is a trusted partner in Asia's semiconductor supply chain. They focus on innovation and advanced engineering to stay ahead. Moving on to the stock analysis of Frontcan. Looking at the chart, the MACD line is at 0.08 and the signal line is at 0.071, giving a small positive histogram value of 0.010. This shows mild bullish momentum since the MACD line is above the signal line. However, the gap is narrow and the histogram bars are small, which suggests this strength is weak and could easily reverse if the MACD line moves closer to or below the signal line. As for the stochastic oscillator, the %K line is at 67.31 and the %D line is at 78.77. There's a bearish crossover here, with the %K line crossing below the %D line near the overbought zone. This suggests the recent upward trend may be losing strength. Both lines are still above 50, so the trend isn't strongly bearish yet, but the crossover shows buying pressure is weakening. If this downtrend move continues, a short-term pullback could happen.
I will now continue the presentation. My name is Pirhamna Binti Haiber, and I will be presenting my selected stock, which is Mr. DIY Group M Berhad. Mr. DIY is Malaysia's largest home improvement retailer, operating more than 1,200 stores nationwide. The company offers a wide range of affordable products, including household items, electrical appliances, stationery, hardware, and more, making it popular among mass-market consumers. Its well-known always low prices strategy has made it a household name. Thanks to its continuous expansion, efficient operations, and consistent earnings growth, Mr. DIY is considered a stable, defensive stock, especially valuable during times of consumer-driven economic uncertainty. Next, let me explain the technical analysis of Mr. DIY. We start with the rate of change, ROC. The ROC9 is currently at positive 5.59, meaning Mr. DIY's price has increased by over 5% in the past 9 trading days. This indicates steady and positive momentum in line with its recent price increase from RM1.60 to RM1.70. There are no sharp ROC spikes, which tells us the trend is healthy and measured, not overheated or speculative. Now, let's look at the Relative Strength Index, RSI. The RSI 14 is at 60.21 with a signal line at 55.50. This level shows that Mr. DIY is in a moderately bullish zone. RSI has remained above 50 recently and continues to form higher low, which suggests growing buying strength. Since it hasn't reached the overbought level of 70, there is still room for price growth without an immediate risk of reversal.
Now, I will continue by presenting Genting Plantation Berhad, one of the stocks selected in our diversified portfolio. Genting Plantation is primarily involved in the cultivation of oil palm, as well as the processing of fruit palm oil and palm kernel. The company operates across both upstream and downstream segments, including plantation estates, palm oil mills, and property development. With operation in both Malaysia and Indonesia, Genting Plantation play a significant role in Southeast Asia's palm oil sectors. Next, let's take a look at the technical analysis to understand Genting Plantation recent price movement and market momentum. We begin with the stochastic oscillator. Currently, the stock is in overbought condition with the percent K line at 93.43 and the percent D line at 85.77, both above the overbought threshold of 80. Since the percent K line remains above the percent D line, this indicates continued upward momentum. However, being in the overbought zone is a cautionary sign, suggesting that there is possibility for a short-term pullback. Moving on to the rate of change indicator. Based on the 14-day period, the ROC shows a sharp increase to 10.11%. This reflects strong bullish momentum typically observed during breakouts or early uptrends. While this confirms the strength behind Genting Plantation current price action, such as steep rise may also indicate a short-term overextension with the potential for a price correction or sideways movement.
My name is Aliah. Next, we will be looking at Top Glove Corporation Berhad, a prominent player in the healthcare industry. Top Glove is listed on Bursa Malaysia under the stock code Top Glove 7113 and had been trading since March 27, 2001. They are in business of manufacturing and distributing rubber gloves. In fact, they are recognized as the world's largest manufacturer of gloves. The strong operational efficiency and high volume production allow them to serve essential industry globally, especially healthcare, and they have a significant market share with a globally recognized brand. Their product, indispensable treasure, also give them a reputation for resilience in the manufacturing sector. Now, let's dive into some individual stock analysis, starting with the Relative Strength Index, or RSI. Currently, Top Glove RSI stands at 35.70, indicating a weak near-oversold condition. When it's just above the typical oversold threshold of 30, it suggests that bearish momentum remains dominant. A short-term rebound is possible if the RSI dips further into oversold territory, but a failure to break above 50 would signal that any rally might be limited without stronger buying pressure. Moving on to the Moving Average Convergence Divergence, or MACD, both the MACD line and the signal line are flat and below the zero line. This indicates persistent bearish momentum and overall weak trend. The histogram bars are close to the zero, suggesting low momentum and market indecision, with no clear bullish crossover at the moment. The sideways movement of both lines below the baseline further suggests a lack of strong buying pressure, and any potential reversal remains unconfirmed without a clear signal.
Hello, I am Nur Ain Sahira. We are diving into the gas and oil industry. The company will be focusing on Petroleum Nasional Berhad, or Petronas, a global energy solution company with a full spectrum of oil and gas operation. Within the broader oil and gas industry, our specific interest lies with Petronas Gas Berhad, or Petgas. Petgas is listed on Bursa Malaysia under the stock code Petgas 6033, and it has been publicly traded since September 4, 1995. It's a Sharia-compliant Malaysian company that specializes in gas infrastructure and utilities. As a subsidiary of Petronas, Petgas's core business involves processing natural gas, transporting it through extensive pipeline networks, regasifying liquefied natural gas, and supplying essential industrial utilities such as steam, power, and various industrial gases to its client. Now let's move on into individual stock analysis, podcast 6033. For my individual stock analysis, I will be examining two key technical indicators, the rate of change and the relative strain index. For the rate of change indicator, calculated over a 9-day period, is currently at 2.04%. These positive readings indicate that pet gas is still experiencing positive price momentum. While this isn't as sharp as breakout signal, the sustained positive ROC suggests underlying strength in the current price movement, even if the rate of increase has slowed from the previous peak. For relative strength index analysis, currently the RSI for pet gas using a 14-period setting stands at 53.96. This reading is above the neutral 50 level, suggesting that bullish momentum is presently more dominant than bearish momentum. Although not yet in an overbought condition, the RSI position above 50 indicates that buying pressure has been stronger than selling pressure recently. A sustained move above 60 would signal strengthening momentum, while a drop below 50 could indicate a shift towards a more neutral or bearish sentiment. That is all for me. Thank you.
Now, I will present the overall portfolio summary and recommendations on behalf of my group. From our technical analysis, each stock showed different momentum signals and price behavior. For Genting Plantation, it is recommended to hold as the momentum is strong, but technical indicators warn of a potential short-term pause or pullback. Top Glove is also recommended to hold due to mixed technical signals and ongoing consolidation with no clear breakout or breakdown. As for Franken, it shows strong bullish indicators but with some sign of slowing momentum, so we advise a hold until a clear breakout occurs. Petronas Chemicals, it presents neutral momentum and price movement leading to a cautious hold recommendation. Lastly, Mr. DIY, as I explained earlier, is in a steady uptrend with threatening momentum but is approaching resistance, making it suitable to hold while waiting for a breakout with volume. In conclusion, all 5 stocks in our portfolio are recommended as hold positions. This cautious stance reflects the technical outlook and helps manage risk while keeping the portfolio ready for potential upsides once stronger confirmation signals emerge. That concludes our group presentation on the technical analysis of selected Bursa Malaysia stocks. On behalf of my group members, I would like to sincerely thank you for your time and attention. Wassalamualaikum warahmatullahi wabarakatuh and have a great day.